Hi guys, it's me, Teresa Perrin. I just wanted to give you an update on HLBZ because they had earnings. So I'm going to go over them with you, and I did record the majority of the conference call that I will play for you at the end of this video if you're interested in hearing it. Guys, I am very bullish on this company long term. You know, I expected them to have decent earnings, which I feel that they did. And I also expected that a lot of times with good earnings, it's a sell the news event and the shorts attack it, which is exactly what it seems to be happening in the after hours. I will show you the chart and why I'm bullish on the overall direction of it towards the end of this video. And guys, if you want the technicals and the breakdown of the things I like about this company, then please go back and watch the video that I posted last night, because I think this is a great long-term hold. But the purpose of this video is really to go over the earnings so you know what to expect and to do a quick chart review. And then for those of you that are interested in hearing the earnings call, for you to be able to. So let's get into it. If you haven't already, please like and subscribe. Okay, guys, so if you're on Twitter, you can follow Salvatore Paella. I'm not sure how you say his last name. Please forgive me. I'm not purposely mispronouncing it, but you can follow him on Twitter, and it's spelled Salvatore with an E at the end, and Paella, I believe it's pronounced P-A-L-E-L-L-A. Anyways, I actually really love his website, and I think he is a great CEO. From the looks of it, he really seems to want to communicate with retail. So guys, check it out. The first half of 2022, HLBZ revenue was up 92% year over year, and the quarter two revenue was up 46% year over year. They are driving towards profitable mobility operations by reducing their cost of revenue by 17% year over year. Like I said, they're up 92% for the first half of revenue year over year. An increase of 90% strong mobility metrics for the QAPUs up year over year. 71% trips up year over year, trips meaning the amount of users taking trips on their platform, guys. 72% mobility revenue of 2.7 million up quarter over quarter, and 46% quarter two revenue up year over year. Guys, the call was all for all bullish, and you know, Sal has a very strong Italian accent, so there were parts of it, unfortunately, that I missed that I'm going to have to re-listen to myself. So anyways, I want to show you a couple things on his website, because I think he has an idea of what's going on with his company. It says, I like them freshly squeezed too. And then, I'm sorry, I should have made this bigger so that you could see. But the picture says, I don't always drink short seller tears, but when I do, I like them freshly squeezed. And then also 6 hours ago, he put hedge fund managers short selling, throwing the ball away, Redditor investors grabbing the hedge fund manager who's trying to catch the short selling ball or throw it out. Guys, I think the point of this is that, you know, the Redditors are going to make the short sellers close their short position on this stock. I think that's the point he's getting at. I could be off base, but that's what I see there. If somebody sees something different, then please feel free to express your opinion with us. But I think that, you know, he's very bullish on his investors and knows that retail is the majority of the investors in this business. Besides for him, I think he has a huge stake. And guys, speaking of that, he bought more today. Check this out. Let's see. Oh, and this was a big takeaway too from what he said. He said, we have focused our whole team from top to bottom to drive HLBZ to profitable operations as quick as possible. Salvatore Paella, founder and CEO of HLBZ. So, guys, I really do believe that they want this to be profitable as much as we do. Let me find the tweet, because I know I shared it on my Twitter, but I'm on his page right now. Let me see if I can find it, because he does say that he bought more. Let's see. Oh, right here. It's short hunting week. Today, at HLBZ CEO and founder at Palea completed a purchase of 252,636 shares of Class A common stock HLBZ. Guys, he continues to invest in his own company. And then here it is again. Rise and grind, minions. I just purchased 252,636 shares of HLBZ. So, you know, guys, I really believe that he's putting his money where his mouth is. Clearly, nobody's going to be investing that much in their business when it's not even in profits yet if they didn't believe in it and they didn't think that it was going places. I can tell you a lot of other investments that I'm in. We want the CEO to put their money where their mouth is and they don't do it. Well, guess what, guys? We don't even ask him. We don't need to ask him because look at all the filings. He continues to keep buying more and more and more of HLBZ because he knows he has a wonderful business. And this gives me great faith in this company because if this were, you know, a scam or anything else like that, because, you know, some of these companies out there that are heavily shorted, you have to wonder why they're being shorted. Well, guys, I don't think that's the case with HLBZ. I just think it's a startup operation, and I think that, you know, shorts took advantage of, obviously, them not being profitable as of yet. But guys, every company starts off as not being profitable, and his goal is to become profitable. And by him investing in his own company, that says a lot, and that's the kind of CEO that you want because, you know, he makes money when the company makes money and when we make money. Bottom line, it is what it is. Anyways, guys, I'm going to show you the chart and then get into the recording from today, and hopefully you can hear it. I haven't checked it yet, but anyways, I thank you so much for watching. If you want more technical breakdown, the short interest, things like that, then check out my video from yesterday. Okay, guys, I want to show you real quick the 1-year chart on HLBZ because it is actually bullish. As you can see, the 13, which is the green line, has crossed above the 48 SMA. So that is a bullish technical indicator that is signaling a trend coming to the upside. And as you can see, we are still currently kind of consolidating as we stand right now. But what I'd like to see happen is for the 13 and 48 to continue to curl up and cross above this red 200 SMA. And that's when we're going to get a lot of institutional buying or hedge fund buying coming in, as well as day traders, because a lot of times they don't like to trade when the trend is below the 200 SMA. It's just something that a lot of traders don't want to touch because look at how long, guys, their money can be tied up as it sits here. And I apologize, but my screen just went off, but I showed you what I wanted to on that. I should have known that was coming since it's 6 o'clock, and Fidelity, for some reason, tends to lock me out at that time. But anyways, the rest of this call is going to be in regards to the earnings call, and I'm just going to give you a heads up that I did it very quickly trying to catch it for you guys, and unfortunately, you might hear my scanner in the background because I forgot to pause it, but you should kind of get an understanding of what the CEO was saying because overall I thought the call went very bullish as I talked about earlier. So I'll let you hear it.
Revenue of $4.4 million was up 46% year over year and 32% compared to the first quarter. Revenue growth was driving both by increasing license and rising in our core mobility business and by our entry into media and food delivery last year. As our core business, mobility, saw solid growth in the key measures As of June 30, 2022, we hold 50 licenses in 38 cities in both the US and Europe. To sustain this high pace of expansion, we have built our fleet and operating teams. In Tampa, Florida, we were selected as a new vendor to replace an existing operator. Expanding in fleet, Michigan and Miami-Dade, Florida are on plan. We also received an expansion for our license in Washington, D.C. and continue to be the only operator in Miami. Looking abroad, we recently expanded our global presence into Australia. We are partnering with Logan, City Council of the Queensland, Australia, to initiate trial operations. We are also starting a program with Alloggio, a leading local holiday rental operator, to offer our scooter to their guests. In Italy, we are partnering with Universal Pictures to acquire a local rider with a fine activation with the new Minions movie. Even with the near-term goal of scaling the profitability operation, we are not ignoring the massive long-term opportunity. We signed a letter of intent to acquire Wheels, another leading micromobility company in the US, and the due diligence is underway. We will update the market as it progresses. Also looking long-term, just last week, we introduced taxi hailing to our app. This service enhances our mobility offering to our customers. For example, can enable them to utilize Helbit even in bad weather. The opportunity here is an order of magnitude greater than scooter alone, and it's capital light, since it does not require us to invest in vehicles. You will learn more about this and on new product as we roll out in the coming months. On our technology front, we are investing to future develop safety technologies. In early July, we introduced Helmet Checker, our self-developed real-time helmet verification function. Helmet Checker is part of the Helmet app, of course, but also can be licensed by others in our industry. As an industry leader, we are motivated to promote safe riding of all micromobility vehicles. Finally, to fund growth, we are building our liquidity. In July and August, we complete a $5 million financing that is part of a planned green bond issue that could be up to $50 million. Our bonds are considered green and can tap a wider pool of investors. Due to this sustainability initiative we launched last December. Those guidelines reflect years of commitment to ESG site inception. Now let me turn the call over to our CFO, Giulio Profumo, to discuss our financial performance for the second quarter. Giulio?
Thank you, Salvatore. Our detailed financials can be found in our earnings release and 10Q filings. So we will concentrate on discussing the drivers of financial performance. Keep in mind that all figures given are for the second quarter of 2022, and all comparisons are with the second quarter of 2021, unless I note otherwise. We delivered another strong quarter and a solid financial performance despite continued headwinds from industry, supply chain issues, and inflationary cost pressures. Both year-over-year and sequential revenue growth was an all-time high in Q2, with strong growth in mobility operating metrics. Revenue of $4.4 million was up 46% from 1 year ago and 32% sequentially. Mobility continued to show improvement with strong top-line growth, contributing 62% of total revenue, growing 72% sequentially, due to the growing fleet size and growing awareness, coupled with the strong utilization due to the seasonal factor of warmer weather. Revenue is still dominated by pay-per-ride, but subscriptions are gaining traction. Overall, the continued strengthening of the US dollar had an unfavorable impact on revenue. In constant currency, mobility revenue would have been 8% higher in Q2 2022 than what we reported. Across regions, strong mobility revenue was driven by solid performance in the key metrics that measures usage. Quarterly active platform users were up 90% sequentially and up 47% year over year. The number of trips were up 71% sequentially and 6% yearly. Looking at the other lines of business, media continues to be an engine of growth, contributing 34% of total revenue. Most media revenue came from commercialization of media rights and Helbit's live subscriptions. We're building momentum in live subscriptions through the Helbit Unlimited offering. Helbit's Kitchen revenue nearly doubled sequentially as we continue to build awareness of this service in our initial test market of Milano in Italy. Turning to the costs and expenses, I want to reiterate Salvatore's comment that Helbit is now 100% focused on getting to profitable operations. All costs and expenses are subject to review. We will continue to invest in growth, but we're doing it more effectively and efficiently. The first area of success is mobility cost of revenue, which decreased by 17%. We're constantly looking for places to automate our operations so that we can increase efficiency, customer service, while decreasing costs. This allows us to quickly identify inventory to move the popular spots of vehicles which may need a battery change. Meanwhile, total operating expenses doubled versus last year, reflecting our rapid growth. Overall cost of revenue was 69% higher, mainly due to the content licensing expenses in media, offsetting the improvements in mobility. Going forward, look for much more subdued OpEx growth as we focus on leveraging the infrastructure we have built over the past year. Digging into operating expenses for the quarter, R&D expense growth represents investment in our in-house engineering team to further optimize our operating systems and customer-facing apps. Sales and marketing expenses grew from last year, demonstrating our commitment to advertising, promotional, and business development, especially after the launch of media and food delivery offerings. We incurred $1 million in non-cash stock-based compensation expenses, which accounted for almost 5% of the total operating expenses. Turning to our balance sheet and liquidity, at the end of Q2, cash and equivalents were $2.5 million. During Q2, we used cash to invest in growth, in particular the purchase of new electric vehicles to expand the operating fleet in several new cities. Keep in mind that our capital allocation approach is to prioritize investments in attractive markets where we are positioned to grow. We focus on initiatives that strengthen our platform, geographic footprint, and customer reach, which in turn lowers our customer acquisition costs and increases the lifetime value of our customers. Our growth goals are aggressive, so naturally we're focused on maintaining a healthy level of funding. In April, we secured $10 million of capital via two convertible notes, and in July we completed a $2 million financing through an issuance of a note, and further raised an additional $3 million via convertible notes. With increased liquidity, we remain confident with our ability to fund the business and pursue our objectives. We're always exploring cost-efficient forms of capital to fund the business and opportunities to further optimize our capital structure. Looking ahead, we expect third quarter revenue to be up sequentially as we benefit from the higher fleet utilization due to the seasonal factor of warmer weather. For the full year 2022, we reiterate our expectation for revenue to double. We're solidly on track to achieve this goal. Now let me turn the call to Salvatore for some closing remarks.
Thank you, Giulio. Q2 was a pivotal quarter for Helbit. We intensify our focus on operating profitability, putting every cost under the microscope to ensure that we are driving profitability operations. Revenue grew substantially and we expanded our operating footprint. With more licenses in the US and our fleet size grew as we deploy new vehicles. We also started licensing our helmet compliance technology, creating a completely new revenue opportunity. Most importantly, we are building the foundation to capture the massive long-term growth opportunity in front of us. We also just announced the Help Taxi, a taxi-hailing service within our app that expands our mobility offering in a high-value, capital-light way. When we look to the future, we have never been more excited about what we can accomplish in the months ahead. We thank you for your interest and support and look forward to reporting our progress to you again in the months ahead. Now I will turn the call back to Gary to wrap up. Gary?
Thank you all for joining the call. If you have any follow-up questions, please do not hesitate to contact us by email or phone shown at the bottom of our press release. This concludes today's conference call. Thank you for your participation. You may now disconnect.